in order to ensure we have good success rate in the stock market, as I always say, you should have a combination of fundamentals and technical analysis knowledge together, right? So today, the difference between them, and we will look at the core details of what exactly is into the technical analysis concepts. And whoever are beginners or whoever are not much confident on the technical analysis or charts reading or usage of trading view, today's session or even the next couple of session in this week will help you to understand more on trading view. We'll be discussing more on the tools related, and we'll be discussing on indicators, right? So without any further ado, let me share my screen and let's study how we can blend technicals into our investing journey in the stock market, right? In the stock market. So first thing, yes, we will be having a brief understanding about the technicals, difference between fundamentals and technical analysis. What are the type of charts we have? Scale, right? Which scale we need to follow? What are the different market trends we have? And what is the importance of price and volume relationship? We will be looking at it, right? So first of all, technical analysis. Sir, why I should study technical analysis? The main reason is to understand the market action, right? And something which cannot be hidden, or something which cannot be manipulated, or something where no one can touch about it is volume, right? Volume is something where no one can have a hold on it. So if there are a lot of volumes that is coming up, means there are more institutions who are entering, right? So it focuses more on charts, and it will forecast the future price trends, right? So instead of randomly forecasting what will happen in the future of a stock or a sector related, a chart, by understanding the trends, by understanding the indicators, by understanding the support and resistance levels, we can have a good forecast of what may come, right? And please understand, market or even stock market, as Mr. Warren Buffett also has mentioned in one of his shareholding letter, history will repeat in one or the other form, right? Any patterns, any stocks charts, if you see, you'll be observing 80% and above the charts will repeat itself, right? So if you understand the trend and if you understand how to plot technically, you will be able to understand the future price trends of both stock as well as the sectors or the index related, okay? And most importantly, or even this is not something new to us, right? We have studied in our schools or colleges also Newton's law, right? Newton's second law. A trend in motion is more likely to continue than to reverse, right? So how is this relevant to our technical analysis? Let's say a company is in a very good trend, right, for a very long period, with a very good volumes also coming up at the bottom, right? It will continue its uptrend until and unless there is some external force. External force can be some kind of a erroneous declaration in the annual reports, right? Or quarterly earnings have failed, or there is a shift of the promoters or financial officers. Until and unless there is a huge impact, this trend will not be disturbed. Similarly, if it is in a downtrend, right, we should not add in downtrend, wait for the trigger to start, and when it starts its movement upwards, then we will be there, right? So please understand, a trend in motion is more likely to continue than to reverse. That's why we always look at stocks or sectors which are trending, right? And identify trends in the early stages of development and trading in the direction of those trends, right? So now, once the trend has been observed, the game is all about how early you identify, right? How early you identify. So here there is a very important catch for many new investors, right? Many new investors. Sir, the stock is continuously moving up, and because of some reason, it is consolidating, and again it has started, right? So if you observe the trend and the early entry, right, identifying the trend at the earliest stage is more important than identifying it little extended, right? So if you see, this is one setup A, and we'll have one more setup, the same stock, right? The same stock after consolidation, it has started moving, right? So if you see, yes, this is the base. Similarly, this is the base. The closer to the base you enter, the better it is. Or the closer to the breakout you enter, the better it is, right? So entering the stock at the breakout, like in a scenario of A, is more better than entering a stock in scenario B at a higher level, right? The longer from the breakout or the longer from the base, you are taking a little high risk. I would not say it's a wrong entry, but the risk is a little higher. You should be a little bit more careful, right? From here, yes, it can further go up, but the risk from the breakout level, we have taken a little bit higher risk, right? So identification of the trend much earlier is also very important. So technicals, we study about the market price, market action, which is the price and volume, right? Which is the price and volume. Whereas fundamentals, we study more about the forces, economic forces of supply and demand that caused the price to change, right? Yes, if it's a very niche company, there is a strong moat, right? There are some qualitative factors in the company. So these forces with a lot of supply and demand factor causes the price to move, right? So fundamental studies the cause of market movements, right? It focuses more on why, has to know why, right? Whereas technical studies the effect, right? With that kind of a price action or volume action, what will be the effect when we focus for the future trend, right? Future trend. So yes, let's say there is a company X where it has a strong moat, right? So what do you mean by moat? As defined by Mr. Warren Buffett, a company which has competitive advantage, right? Competitive advantage can be in terms of its goodwill. It is there for a very long term, some decades it is there. It has very good management of the company. It has some unique products, right? Some niche products where everyone can't manufacture that. Very few competitors are there. It manufactures those products which are like, manufacturing cost is so high, the entry barriers are so high that someone cannot easily establish their business, right? So all these factors are related to competitive advantage in a business called as moat, MOAT, as defined by Warren Buffett. So fundamentals, we look at those factors, but these are not sufficient to just have a change in the price movement of a stock. Technicals will help you to gauge if the volumes are increasing. Yes, there is more institutional activity, right? That's why a combination of it works wonderfully well, right? Wonderfully well. Now, when you are studying the stock, right, we have different types of charts, right? We have different types of chart. We have bar chart, line chart, candlestick chart, hollow chart, right? Your Heikin Ashi chart, various charts are there. So bar chart is the vertical bars which are represented, right? So every stock has a high, low, and a closing price, right? High, low, and a closing price. Now, if you see at the bar chart, yes, whenever on a specific trading day, the stock has started movement, right? We have opening price and the closing price. And on that day, whatever it has touched high, we have high and even low. Now, if we observe on all the charts, the most widely used chart is the Japanese version of the bar chart, which is candlestick, right? We mostly use this chart. The reason being, we can interpret more from a particular candle, right? Particular candle. So the setup is same like bar chart. you have your opening price, you have your closing price, you have your day high, and you have your day low, right? And the most important is you will be getting the body of the chart, right? So this signifies a healthy candle, right? Healthy candle. So this is called as body, and this is called as your wick, or it's also called as shadow, right? It's also called as shadow. Sir, why should we understand this part? Yeah, why should we understand these particular things? For example, on a specific day, let us say a candle is formed like this. This is the body and this is the wick, right? Which means on the day this stock had a lot of demand. And even if you see, if this is your chart, right? Yeah, so let me keep this side. Okay, yeah, if this is your chart, you'll have a strong volume also on that day, which means on that particular day the stock has gone to a high price. It has had a very high on that day. It did not sustain, means the buyers were not able to sustain that price. Sellers were also there, profit booking has happened, and finally settled here at closing price. This is how you will be able to interpret, right? This is the opening, this is the closing, and this is the day high. And if you observe, many of the IPOs, initial public offer, on their listing day will exhibit this kind of a setup, right? Similarly, if you see a particular candle wherein a small body is there and there is a long wick on the downside, which means there was an opening price, closing price, and this is the day low, right? So it went to a day low, but again, as the action from the buyers have started, it has recovered. Yeah, it has recovered. So this recovery signifies, yes, buyers action is happening, right? Buyers action is happening, right? If you ask me, this kind of a candle, when it is coming, the follow through days or the next trading days, the stock can revive better, because buyers are there to bring up the price much better, right? Much better. So this detailed understanding we'll be able to know from the candlestick chart, right? That's why we mostly use candlestick chart by default in TradingView, and line chart is just to understand the trend. For example, sir, I wanted to analyze Nifty for the last 20 years, or Sensex I want to understand for the last 20 years, right? We need not see every day what is happening in the stock price, right? So instead of a candlestick chart, a line chart just connects the closing price. So here you don't have your opening price, you don't have your high, you don't have your low price, you only have the closing price. So all the closing prices of a particular day, the dots will be connected and there is a solid line which will be formed, right? So we hardly use line chart. The reason being, it only connects the closing prices of the stock just to analyze the chart pattern, right? Now let's use TradingView and let's study about them, and we will also look at Heikin Ashi chart in our today's learning, right? In our today's learning. So yes, if you observe, this is our Nifty 50, right? Our benchmark. So what is the default chart we have loaded here? This is a candlestick. So how are we saying that? We have opening price, we have a closing price, we have day high, and we have a day low, right? Yeah, if you see here, yes, every candle has the opening, closing, day high, day low. So how do we select that? Next to your time frame, right? You have your daily, weekly, and monthly. This is how you will be selecting, right? So we have observed the bars, candlestick chart, hollow candles, line. If you observe line, it's a solid line, right? Every day closing, it will be connected and there is a solid line which will be forming, right? So and this is your bar chart, which we saw in the charts analysis, right? So a bar is almost similar to the candle, but there is no a wide portion, the body is not reflecting, right? So instead of a bar chart, we use candlestick chart. Now comes very important part, right? So what did we discuss? We have discussed about bar charts. We have discussed about line charts, which connects the closing price of the stock movement, and candlestick chart, which is just the Japanese version of the bar chart. Now the most important chart is Heikin chart, right? So how do you load the Heikin chart? You go to the charts loading, and here you have Heikin, right? So the advantage of Heikin is it will tell you the trend. Sir, everyday stock price movement I am able to see using the candlestick. Day open, day close, day high and day low. But what exactly is the market movement? Heikin will tell you, right? And the disadvantage of Heikin is you will not be able to analyze everyday movement. For example, if you see Nifty 50, right? I load a candlestick chart. You observed in the last trading session on Monday, yes, we had a decline, and Friday it's a flat day, right? So we have two red candles, but Heikin shows you an entire positive candles because the trend has been bullish for almost these entire candles on a weekly chart, right? On a weekly chart, if you observe, it is bullish for almost 2 months, right? Almost 2 months, which is from November. So yes, a 1 week or a couple of days inactivity, it will not consider as red. And let's say, sir, I have been bullish on a sector or a stock or a particular index. I don't want to get involved with the daily noise or a daily price fluctuation. Just load that company in terms of Heikin, right? So this will tell you what has been the trend from the last a couple of days, right? So now comes a very important question. Sir, Heikin on what all time frames can I apply, right? So this Heikin right now we are on a weekly chart, right? Every week it is analyzing. You can go to daily chart, right? You can also go to an hourly chart or a 30 minutes chart, right? Or a 30 minutes chart or even much below chart. But I would not recommend Heikin on a monthly chart, right? Monthly it will be like too extended. But yes, daily, below daily and up to weekly you can observe, right? So yes, if you observe on a daily, Heikin is showing a positive move, right? Yeah, if you load your Heikin, it is showing a positive move from almost November, right? 1 day of inactivity, right? And again a positive move. And right now if you see, little bit fluctuation here, right? Little bit fluctuation here. And if you look under weekly chart for Nifty, right? Even if you look under your normal candlestick chart, Nifty has been very bullish from even October onwards, right? This week, the first week of January and even the earlier week, right? The 1st Jan and 8th Jan has been little bit flat, right? Little bit flat in a candlestick. Whereas Heikin, if you load, it is not considering it because the couple of weeks has been stronger along with the volume, right? So I hope everyone understood the discussion between different types of charts, right? So by default we use only candlestick chart, and to understand the trend of the company we use the Heikin, right? Any company wherein you have already been there and it's not losing aggressively on the price and volume, go back and check on the Heikin chart. If it is showing a clear trend, you are good to stay there, right? You are good to stay there. And remember, when loading Heikin, the only problem is maybe every day price difference or price fluctuation it will not be capturing. It's only used for the trend analysis, right? Trend analysis. Okay.